So you think my portfolio is fake? Well, this is my bank account. This is my stocks. This is my top account. This is my stocks. And this is my portfolio tracking tool. And this is my stocks. So now that we have that out the way, let's take a deep dive into my portfolio. Hi, welcome back to the third Bara, where we talk about investing on the Trinidad and Tobago stock market with the sole purpose of gaining financial independence. So, welcome to this journey. So, I know you guys saw the title of the video and you saw my intro. And the reason why I posted this the way I did is because I had a look at my YouTube stats and I noticed that, first of all, let's give ourselves a round of applause. We are at 50 subscribers. I remember starting this, and it was quite a long time with five die-hard subscribers, but now we are at 50, which is good. But I also looked at some stats where half the number of people who look at my content do not subscribe. And I'm thinking, why would that happen? And then I thought to myself, you know what? I know Trinis. I know my people. People watch this and say, this has to be fake. And I don't blame them. Anyone can go on Simply Wall Street, put in a lot of fake data, and presto, they can come up with a portfolio and then create an imaginary YouTube. Now, for me, I think that's a lot of work to fake this, but it's doable. So I just wanted to reestablish the credit of this channel. This is my real portfolio. These dollar values are my hard earned dollars that I worked for, and I bought these stocks. And my channel, I mean, when I thought about this channel, I'm thinking sometime in the future, when my kids are grown up, they can go back and look at this channel and see the way I invested over time, especially during the current events, the different news, so they can learn. And what better way to teach than letting them see as I go along? But I also made it public because you know what? I like to share information. I think this is my way of giving back. And I wish when I started, I had a channel that I could follow as well. So this is the intent. So it's not fake, it's real. And the goal of this upload is to take a deep dive into my portfolio. I will step through, since I have a lot of new people on the channel and they may have not seen my earlier videos. So I'm going to step through each of my holdings. You're going to see when I bought, when I sold, and you can have a look at the current performance. Okay, let's dive in. Some of you may have observed that, especially if you were here from the start of my channel, that since I've been posting videos, I have not bought any stocks. And there's a reason for that. My goal is really to be able to invest 20,000 every 2 to 3 months. It depends. And what finances this really is my rental that I gain from a rental property. But recently I had to do some renovations. My tenant got up and ran away. So I had to divert the cash that was supposed to go into my stock portfolio into getting back my rental property online. And I think I'm at that point. So let's see how it goes for the next coming months. Let's see if I could get back buying stocks because it's a great time to invest, I always say. So my strategy really is to invest in tranches of 20,000 because I'm able to send 20,000 from my bank account to my top account, my TTSC online platform account. And that's just the way I've been doing it. So I've just been sort of saving. And when it hits that 20,000 mark, I send that 20,000 to top. And then at that point, I would usually have some targets that I want to invest. And then based on the current price and what's going on, I choose which of the targets I will invest in. So that's generally how I invest. Now, let's dive into the details of my portfolio. So as you can see, this is now my default uh, template for going through my portfolio. These are my holdings. This is the total bought, total shares, and you can see the rest of the table. So let's step through. So in case you missed my previous video, the return, the annual return of my portfolio so far is 5.37%. Let me go quickly to the indices. So far, my holdings are performing at 1.9%, and the Trinidad market, the composite index, is down minus 2.8%. So I'm outperforming the market. All right. So let's start with First Citizens Group. Let me scroll down. Oh, this is a scroll bar. Let me scroll down to, let's go with First Citizen. So, of course, you guys need to read those annual reports, the latest annual reports. You can read the previous year's annual reports. That will give you valuable information on whether you should invest in this company or you shouldn't invest. So, my First Citizens holding, as you can see here, this was one of the first shares I bought in 2019. You can see the date here. It was at $39 a share. I bought 500 shares. How much did I spend? See, I used the entire 20 and I bought 19,500 worth of shares. I probably did invest around 20,000, but there's fees, of course, attached with buying shares on the Trinidad Stock Exchange. So that was when I first bought these shares. Then some time went by, and last year, I put my head down and I said, you know what? I'm going to buy more stocks. But I did something very interesting here. I bought some stocks and then I sold soon after, a couple days after. And honestly, it was a mistake. I bought too much because I saw another great deal and I ran out of money. And it just so happened that if you looked at the price, I even lost. Yeah, so the price when I bought was 40.45 and the price that I sold was 40.41. So I lost money overall in that transaction. As I said, I'm new to this. Well, not new, but I'm not perfect. This, looking back now, was actually an impulsive decision, but we keep going. So I bought and I sold and I ended up with 730 shares, and I've been holding that amount of shares ever since. Also note, especially for the newcomers who's watching my video for the first time, between the first time I bought and 2019 and 2024, dividend payments, one payment per quarter for 2021, but the rest of in 2021, yes. Oh, that was the result of COVID. So during COVID, oh, this is interesting. I never noticed this. During COVID, banks stopped paying dividend. So First Citizens did not pay any dividend during COVID, and they restarted in the end of 2021. Well, that's interesting. That is interesting. So they restarted in 2021 and they continued every quarter since then. So 2022, four payments, 2023, four payments, 2024, four payments, dividend payments here. And then, of course, 2025 this year, at the end of March, they had a payment, dividend payment as well. So that is actually interesting. First time I noticed that. So the result of that is for the, let's see, for the time period, so they averaged it out because I bought the bulk of, well, not really the bulk, but I bought some recent shares. So they averaged that. So for the time period, the total return of my first citizen shares is 4.89% per year. So this value is a per year. If you don't know what this value is, go back to my previous channel where I explain what stock returns are and how you interpret it. So this is an annual return. So First Citizens has been returning annually 4.89%. Let's keep it going. Now I have Unilever. Unilever is an interesting stock. I bought it because I thought these people sell household products. This is probably a good uh, company to invest in. But their share price, notice the share price was $26 here, and now their share price is $12.85. So their share price has dropped since 2019 and it never recovered, which led me to a overall capital loss of minus 9,000. But the interesting thing is that Unilever has been a profitable company over those years. So maybe the market just don't value Unilever stocks for some reason, but they've been constantly paying dividends, as you can see. 2021, 2022, 2023. Sorry, this is the ex-dividend date. This is the data that's paid. So this 2021, 2022, 2023, 2024. And over the years, the dividends I've gained from Unilever stacked up to now 8,000. So when you look at what I've lost in in appreciation, but what I've gained in the dividends, overall, the return is just minus 1.59%. And maybe I'll clip it in. I do think I have two dividend payments to collect next month from Unilever. If that's the case, I'll clip it in right here. So maybe Unilever actually is a good company to keep on investing because now their share price is on sale. But let's keep it moving. Now we have Prestige Holdings, and we all know when we go out to eat, most likely it's a Prestige Holding restaurant, and they're also expanding into Guyana. And you know Guyana is where the money is right now. So I bought Prestige Holdings in 2019 once, and I never bought again. Maybe when I start reinvesting money and buying stocks, this will be a share I will be on my target list. But when I bought it at $9.75 in 2019, the share price now is 10. So I got some capital appreciation. But Prestige Holdings also constantly pay a dividend, as you can see here. 2019, 2021, 2022, 2023, 20, so they constantly paid a dividend. And the total dividends was 2,940. So the annual return that I've experienced from Prestige Holdings is an annual return of 3.51%. So this is a good company to invest in, I think. They have performed well. Next on the list is Massey. And of course, you know, Massey is the jewel of my portfolio. I bought it first in 2019. They had a very good couple of years in from 2019 to 2022 where they outperformed the US S&P index. I think if I recall correctly, their share price almost doubled. And then what happened is that they had a stock split. So what that happens, that creates more shares on the market. So where I had 360 without buying any stocks, I now had 6,000 because they had a stock split. So now I had 6,840 shares just because their share price appreciated so high. And maybe in another video, I'll explain why companies do stock splits. But I did not buy here. This was just my 360 splitting up into more shares. And of course, Massey continues to pay dividend. In those days, they paid twice per year. Let's see. Yep. They paid, well, this was 3 times. They paid basically twice per year in dividend payments. Last year, I got serious with Massey. As you can see here, I bought some more. I got a dividend payment. I bought some more. And you can see the amount. So now I have a total of 123,000 dollars in Massey shares. The total shares is like almost 35, just short of 35,000 shares. And the capital appreciation of experience is up to 15,000 or thereabouts. And of course, the dividends is 10,000. I mean, this is an excellent company. I don't know why more people don't invest in Massey. My annual return, look at this. My annual return, because I'm holding Massey shares, is 14.57%. Imagine you investing in something and you're getting back every year 14% return. I tell you, no one's talking. When people making money, no one ever talks about it. It's quiet. People making money quietly in Massey. I'm trying to diversify my portfolio and resisting the urge from dumping my entire portfolio into Massey. That isn't smart. And from an investment point of view, you don't want all your money in one stock, even though that stock is performing well. But if anything happens with that company, is your entire portfolio might tank. And you have to always be aware of that. They've been performing, but of course, past performance does not determine future returns. Always keep that in mind when you're investing. All right, let me speed up a bit. Whitco, West Indian Tobacco. I'm not too sure about this stock. I bought it in 2024. I thought this was a good company. Maybe it's too short a time period. I'm currently in the negative, is negative 56% annual return for having it for about just over a year. They do pay dividends, which is at least is a good thing, but I don't know. Luckily, I don't have that much invested, just under 10,000. So let's move on. LJW Limited. Man, I don't know why this is in my portfolio. I read their story and they said they were the oldest company in Trinidad or something along those lines. And I fell for the story instead of reading the fundamentals. So I'm paying for that now because I haven't gotten any dividend payments from them. Their share price has dropped. So my return so far is minus 45%. I'm not sure what I'm going to do with this company. I don't think I will sell. I'll just let it rot in my portfolio, but I don't take it seriously. I look at this as, you know what? I invested 10,000. It's now at about, the value is now at about 5,000. I lost 5,000, but let's see. I'm going to hold it for now. I don't need the cash, so I won't sell it. I'll just hold it for now. Next is NEL. NEL has been pushed by the government, well, it was created by the government so that you can take advantage of It's like a holding company that has shares in other companies. So they have shares in TSCT, they have shares in some energy companies, they have shares in a basket of other companies that's not on the Trinidad Stock Exchange, except NFM. So they marketed this as a high dividend paying company. And I experienced one dividend because I've only had it for a short time, just less than a year. Well, not less than a year, just over a year, because I bought it in April last year. And I've experienced one dividend payment. So depending on the dividends payment this year, I will see. But I did go hard with it. Right now, I have the current value is 33,000. So I did go hard. The share price dropped slightly. So, no, not dropped slightly, dropped by 16% actually. So far, the returns is minus 15%, the annual return. But I'm expecting dividends this year. So maybe the dividends will cancel out this drop, this 6,000 drop, because I have a lot of shares. I have like 13,000 shares. So let's see how that goes. I haven't lost hope with NEL shares just yet. CIBC. Well, if you also my earlier video, this is one of the three main stocks that's going to form the core of my portfolio. CIBC, I started investing heavily last year, and the current value is at 66,000. I have 8,000 shares, and the current return is 15.42%. So you're seeing a pattern. Both Massey and CIBC, one, they're the core of my portfolio, and they are high return. Now, when I say high, double-digit returns. That is very impressive. Double-digit annual return. Now, you hear people talking about the S&P 500 over the long term earns 10%. Well, we have CIBC Bank and Massey who's earning 15% annual return. But you won't hear that anyway, only on this channel. Let's continue. Grace Kennedy, the Jamaican company. These guys, top class company. Top class. Their dividend, I like everything about this company. Every time I read their annual report, I just like it. Put a smile on my face. They take care of their employees. A good dividend paying company, and the dividends rise over the years. So the only thing is that I have not had it for a long time. It seems that over time the dividend payments will outweigh the capital gain, but I could be wrong. So far, it's earning about 6%, but I've only had it for a short time. But this company, excellent conglomerate. So that's the third company that's forming the core of my portfolio. So let's keep an eye on Grace Kennedy. All right. National Flour Mills. I invested in National Flour Mills because I really thought this was a safe, dependable company. They had some financial difficulties within the recent times, but now they're over that hill. So I'm expecting this dividend snowball to start rolling. So I bought late last year and early this year. So very recent. In November last year, I first bought, and in January this year, I bought. So my total holdings is just under 60,000. I'm expecting big things with National Flour Mills because Trinidad love eating flour, plain and simple. So I'm expecting big things. They sorted out their issues. So let's see how the dividends look for this year. And finally, the final company in my portfolio is Guardian Holdings, which once again, I discovered this company late last year. So I bought twice in December. So, and actually, I recently, which was in May, recently got a dividend payment. Let's see how much that dividend was. I got 1,500 dividends. So in that short period of time, When you calculate the annual rate of return, even though it's just been maybe 6, 7 months, 14.6%. So Guardian Holdings might be a surprise for me. I wanted a financial company, a non banking finance company on my portfolio. And Guardian Holdings was it. So far, so good. Double digit annual performance. But to be fair, it's just been a couple of months. So it's too short a period of time to really understand how this company will perform. So, folks, that's my portfolio in a nutshell. All right, that was a quick but a deep dive into my portfolio. You guys can pause and see exactly what the numbers, make sure the numbers make sense because I tell you, this isn't any fakeness on this channel. Um, Let me reiterate that when I invest in tranches of 20,000. So somewhere in my bank account, I'm slowly building up to 20,000. And once I hit that 20,000 mark, I'm sending it to my TTSC online platform and I make the purchase of shares that I've been monitoring. So until I get the money to invest, I keep monitoring. I look at the company, their news, any news releases. I keep track of what's going on in the business sector with these companies. Once I gain that 20,000, I hit the trigger and I invest. That's how I do it. So I hope this deep dive was valuable for you and anyone who had questions in terms of when I invest, what I invested in, if my portfolio is fake or not. I hope I answered this in this video upload. So once again, just get started. Forget about all the fancy stuff, all the fancy terms called dollar cost averaging and lump sum investing and all that stuff you see on YouTube. Just get started. Recently, someone asked in the comments what I would do if I was a beginner with $10,000. And I told them, listen, this is what I would do. If it was my 10,000, I would invest in Massey, I would invest in First Citizens Bank, and I would invest in Grace Kennedy. Why? All three of them pay quarterly dividends. Massey pays quarterly dividends, First Citizens pay quarterly dividends, and Grace Kennedy, not only do they pay quarterly dividends, but you get a US dollar check every 3 months. Whereas Massey and First Citizen, you'll get the TT cash directly in your bank account. So as an investor, you need that motivation. So if you invest now in those three companies, in the next 3 months, you are going to get dividend checks. That's what I suggest. So take care. Bye for now.